dear delegates, first of all, I would like to take, I'm privileged to be here based on the invitation from Franchise India. And on behalf of Brickworks Rating, we take special privilege being presenting here. And also we have published a special booklet for the benefit of SMEs. You know, when you have time, please go through the booklet. It is from a perspective of credit rating agencies, how it will help SMEs to benchmark themselves and how to get a better rating. This is what we have said. In other words, the way we do a rating, we have clearly gone through the various parameters as well as a case study for you to appreciate. So whenever you have time, please go through that. This presentation is basically enhancing creditworthiness through credit rating. So the idea here is, just before the little background about the role of SMEs in the country. We are all aware that more than 20 million SMEs are there in the country, contributes around 40% of the manufacturing activity. And a composition, if you look at from a perspective of a gross domestic product, SMEs contribute roughly around 8 to 9%, and which is again likely to go up substantially based on various initiatives from the Government of India. And it is next to agriculture, the largest employment service provider. Also in the form of exports, when you look at it, more than 40% of the exports are contributed by the SMEs. So today, it is not only the need for SMEs to grow, but from a purely economic perspective also, from a country's perspective, it is a must for the country to make sure that the SMEs are successful in the country because it provides stability. If you look at a large entity, whenever there is a recession, when there is a downturn in the economy, you'll always find there is volatility in the economy. Whereas on the other hand, SMEs, independent of whether it is upturn or downturn, they'll be able to provide stability. So that's where you find whether it is from an employment perspective or from the perspective of stability, you always need the SMEs to be successful. And so my presentation here is to talk about purely from a credit rating perspective, what we look for a company to be much more successful. In fact, if you look at the other, in a simple meaning of creditworthiness, what we look at is the ability of the company to fulfill its debt obligations. For example, when a banker or any other lender provides funds to SME, what he looks for? He ideally looks for whether this company which borrows the money, whether they will be able to repay the money and also on time. This is what simply he is looking for. So when, for carrying out this, he does the assessment of the ability of the company to pay. They look at various parameters, the n number of factors they look at whether this particular company would be able to repay. But above all, what they also look at the track record of the company in the past, whether they have been paying to its suppliers, customers, whether it is to the bankers, what is their behavior pattern. So they look at various parameters before finally taking a call. So when we look at credit rating, we always say that it is not on a standalone basis whether a particular company is good or bad. It is relative, related to the peer group, related to the universe of various other companies, how this particular company is. So when we say a AAA or a AA or a single A company, we don't say that a particular company on a standalone basis, whether it is good or bad. What we say is that related to the peer group, how this particular company stands for. So that's one perspective. When we look at credit rating, it's always relative. The second aspect is, generally credit rating does not stop only with the historical performance. It also looks at what is the potential performance. In other words, when we do a rating, we talk to the management and try to understand what is the company's vision and their plans, what is the sustainability of the business model, to understand whether this particular company, not only in the past, but whether they will be able to sustain their business model. So the second point what I want to highlight is credit rating is always forward-looking. It's just not purely based on historical perspective. So effectively, when we look at rating, somebody looks at whether you're a banker or a trader or an importer or exporter, when they look at a credit rating, what they try to look at is whether this particular company in the long run, how is it sustainable? So credit rating communicates that. What we have done is, instead of comparing companies with large entities, we have developed a special framework only for SMEs, because it's not correct to compare apples and oranges. So what we have, a separate rating scale in collaboration with the National Small Industries Corporation. We developed a framework for only for SMEs, where instead of giving a simple rating, what we have done is we have rated on a two-way scale. One is what we call the operating capabilities, and another on the financial strength. Because putting everything together and give a rating, somebody will have capabilities, very good operating capabilities, but they may not have funds. That's why they need they need funds. If the funds are provided on time, possibly with their combined strength of operating capabilities, they will be able to perform better. On the other hand, somebody will be sitting on huge funds, but if they don't have the capability, howsoever you have money with them, then they are not able to be successful. So we have captured these two critical elements of the operating capabilities and the financial strength in the rating scale, which is again used by all rating agencies in consultation with National Small Industries Corporation. But the other point which I want to highlight is that quite often the question comes is the rating helps the SME? Today, standalone basis, if for an entity to go and borrow money, showcasing their strength or weaknesses, sharing the financial performances, etc., is it possible to access? Whereas an independent opinion in the form of a credit rating by a recognized credit rating agency, when it is provided, then automatically whether a banker or an importer or exporter looks at that, okay, the company is not well known, it is not seen by many people, the awareness about the product is not known. However, for a limited purpose, there is a rating report which is available, which is an independent opinion. And that rating report gives the strength and weaknesses of the company and also the potential business model of this company. So they have something to talk about when they are wanting to access any funds or expanding the trade. So in other words, credit rating helps, first of all, for a speedy access to funds. Secondly, it also helps to bring down the interest rate. Suppose somebody going to a banker and then trying to get funds. Suppose banker says that I can lend you money at 14% or 15%. If you have a credit rating, you'll be able to compare. Let's say your credit rating is some equivalent to AAA or AA, then what you do to go and tell the banker, my other company in the peer group is commanding rating interest rate of only 13%, why are you charging 15%? So credit rating helps you to negotiate with the banker as well. So in other words, without your knowledge, if you're going to pay higher interest, instead, with the help of a rating, you're going to get benefited. Another situation you look at, you are exporting or importing. In the international market, they may not know about the knowledge of this particular SME. With the rating report, you'll be able to showcase and then present your case well, and you'll be able to expand your trade, either for importing or exporting. It helps you substantially. So that way, the credit rating has a number of benefits from a perspective for somebody, a stakeholder, to understand about the company by an independent opinion. So what we have tried to cover here is there are some, I won't say it's mantras, but it is simple way to conceptualize the whole business of SMEs, what others are looking for while to be classified as a successful business model. The first most is the strengthening the business model. So what is important is when you look at your business model, you may be operating in a particular location, you may be manufacturing a type of product, you will be offering to a particular segment of customers, you will have certain imports or exports in your business model, a particular type of technology what you will use. But the first assessment what you may have to look at is what is your market position in terms of, are you going to call it in the form of a market share? Market share sometimes misleads. So from a SME perspective, what is the best ways to look at is, let's say you are operating in a cluster, Faridabad cluster, or a Gurgaon cluster, or somebody is operating at a Jalandhar cluster. Within your cluster, how are you as compared to other peers in your group? What is your market position? Are you leader? Are you number two? Are you evolving company? First, you need to assess yourself completely in terms of market position. Also, it's very important, as we look at, there are many multiple people who are engaged in the same business. But whether you are able to command a particular pricing, is your client skews you for pricing, or you are able to command your pricing because of your quality, etc. That is what you need to understand. So as long within the market, how are you positioned? Are you able to command a particular pricing regime? Unless you command a pricing, you will not be able to sustain. So the most critical requirement, I have given some illustration here. If you look at the bankers like SBI, the moment they set the interest rate, all other bankers follow their interest rate. Suppose they change the rate for deposits, they suddenly bring down by 0.5% to all their depositors. Then the rest of the banks also follow. In other words, they clearly set the trend. What should be the interest rate in the market? Similarly, ICICI Bank, if you look at the retail side, they are able to command a certain trend in the marketplace. So similarly, as an SME, whether you are in textile, whether you are in auto ancillaries or some other business, are you able to create certain trends? Because there you are able to position yourself in the market that you are a superior player. Second is, in addition to your activity of doing business, are you able to create any specific branding? Because finally, the brand is not only for the today's products, but also it helps you to develop more products and then use this brand to leverage and then sell the other products, upselling, cross-selling, all those things are possible if you are able to create a brand simultaneously. So creation of brand is very critical, and in the market, how your brand is perceived is also to be assessed. And sometimes why I'm highlighting this Hindustan Lever case is sometimes somebody may be having a very good market share, but if you are not able to, accompanied by a profitability, it's not sustainable. So it is just not only market position, combined with profitability is very critical when we talk about market position. Suppose somebody is manufacturing detergents, and one of the player is commanding 20% premium, another player is commanding only 10% margin. So there's a big difference, 20% and 10%. So are you able to, whatever products you are able to create, are you able to create a higher margin? The second is the operating efficiency. How is your internal organization strength, whether in terms of capacity utilization, or optimizing the resources, human resources, or using the technology? If you look at your internal strength, to what extent, how you are able to exploit those internal strength. So on the one hand, you look at what is your positioning in the market. On the other hand, you are going to look at internally how you are positioned in terms of optimizing your resources. The combination of the market and the internal efficiency is what takes you forward. This is what we say that when the first mantra, what I talked about is strengthening the business model. What is today as a business model, you need to continuously re-engineer and continuously work on that to make sure that look at for the future and continue to re-engineer. The second is, I'm doing very well in terms of market. I'm also doing very well in the internal aspects, but how I'm performing with reference to peer groups. Today, what I want to say is that if you are engaged in textile, don't restrict yourself, your benchmarks of performance, etc., only to your own aspects of only the textile industry. But you, as an entrepreneur, you have to benchmark yourself with all SMEs. If I'm earning margins 10%, if some other business, somebody is earning 20%, 30%, it is very important that you should also be able to earn higher margin. So what is that? You need to benchmark continuously. That don't resign to the fact that this particular industry, always there is a pressure on profitability. So, but within the industry, I'm doing well, even though there is a pressure in the margin. That is not sufficient, but you need to benchmark how in the entrepreneurial world, because finally, whether it is a lender or an investor, what they are going to look at, they are not going to look at your leader in a particular industry. What they are going to look at, from their perspective, how you are good as compared to various other companies in the universe. So that's where, it's just beyond the so-called looking at your internal strength, look at the external world. The third important aspect is the assessing the management quality. What we here say is that howsoever the company has a very good business model, very good positioning in the marketplace in terms of opportunities and the demand and supplies, but what is the ability of the management to take the long-term vision and implement it? So is there a succession in the process set in? Whether you have a track record of honoring the various commitments to suppliers or customers. Are you having a good track record of making the payments? Because we are talking about the management culture. When we look at, we are not saying that the management means only the track record of experience and qualification and also the knowledge of the product, but beyond that, how they are able to demonstrate themselves in the marketplace about their fulfilling various commitments to across stakeholders. So the third important mantra is the continuously strengthening the management qualities. Of course, the fourth is the critical, sometime, ultimately, whether howsoever your business model, your benchmarking, your peer groups, it should be finally translated into financial performance. So your goal should be to have very clear objectives of improving the financial performance. Of course, there are a lot of ratios one looks at in terms of assessing the financial performance, whether it is the interest coverage ratio or a capital structuring, debt service coverage ratio, your return on capital, working capital, etc., various parameters. So there are 5, 6 critical parameters one should benchmark and then try to see how I am compared to X, Y, Z, how I am doing. So if we can have a long-term goal, suppose today your debt-equity ratio is 3:1, what is your long-term goal over a period of 5 years? What is your positioning? What you want to be there? You want to reduce the debt? Whether it is going to be debt-equity from 3:1, whether you want to bring it to 1:1, you need to benchmark. Suppose your interest coverage ratio is only 3:1, whether you want to increase it to 6:1, 8:1, you need to clearly benchmark. So unless or otherwise, you also, besides your business model, you need to have a vision on how your financial numbers will look like, for which you require a very clear financial discipline and also a vision for that. Of course, it's a small, I think one of our speaker, Mr. Mahendra Swarup, talked a lot about how to think differently. So I've just written here, think differently, not just based on today, but over the next 5 to 10 years, to which type of customers you are going to serve in the future, what type of, how are you going to reach them, how is going to be your competitors in the future, and where the margins will come, which type of products you are going to make. Like that, you have to think deep while drafting the very clear business plan and vision in the future. So I just want to end it here, making a difference together. We must be the change we wish in the world, so, to quote Mahatma Gandhi. So I just want to highlight this is a very brief session, and credit rating is so critical. Some of my colleagues are there, also available during these 2 days. Whosoever you require any inputs on this, we would be very happy to provide you support. It's just an eye-opener, this few slides, what we have put it across. And I just want to summarize that if you have want to be successful in a business, you need to enhance creditworthiness, and that thereby it enhances the various confidence of various other stakeholders as well. Thank you.